minimize tax liabilities with commonly overlooked deductions for small businesses. Understanding tax deductions tax season is an opportunity to uncover savings for your small business. You can significantly reduce your taxable income by leveraging commonly overlooked deductions. To begin, it's essential to understand what tax deductions are and how they work. A tax deduction is an expense that reduces your taxable income, which in turn reduces the amount of taxes you owe. In the context of small businesses, tax deductions can help minimize tax liabilities and maximize profits. Types of tax deductions. There are several types of tax deductions that small businesses can claim. Here are some of the most common ones. Business use of your home. If you use a dedicated space in your home for business, you can deduct a portion of your rent or mortgage interest and utilities as a business expense. Business use of your car. You can deduct the business use percentage of your car expenses, including gas, maintenance, and insurance. Meals and entertainment. You can deduct 50% of the cost of meals and entertainment related to your business, but only if they are reasonable and related to your business. Understanding the home office deduction. As a home-based business owner, you may be wondering if you can deduct the cost of keeping your business functional. The answer is yes, but there are specific rules and guidelines to follow. The Tax Cuts and Jobs Act, TCJA, of 2017 introduced a new standard deduction for single filers, increasing it to $12,000. This change affected how business travelers can deduct expenses. The TCJA also introduced a new 20% deduction for qualified business income, QBI, from pass-through entities, such as partnerships and S-corporations. This deduction applies to business income, not expenses. Business travelers can deduct expenses related to their work, but they must be directly related to their job. The simplified method is more straightforward, but the regular method may be more accurate for larger spaces or more complex expenses. Home office deduction simplified. Understanding the basics. The home office deduction is a tax benefit that allows self-employed individuals and small business owners to deduct a portion of their home expenses as a business expense. This can include a dedicated home office space, utilities, and other expenses related to the business use of the home. Eligibility requirements. To qualify for the home office deduction, you must meet the following requirements. You must use the space exclusively and regularly for business purposes. The space must be used for business purposes at least 25% of the time. You must have a dedicated home office space, which can be a room, a corner, or even a closet. #### simplified method * simplified method. The simplified method is a flat rate per square foot of your workspace. The benefits of outsourcing financial services. When it comes to managing your finances, it's easy to get overwhelmed by the numerous tasks involved. From bookkeeping and accounting to tax preparation and financial planning, it can be challenging to keep everything in order. Understanding the concept of business-related bad debts. Business-related bad debts refer to the financial losses incurred by a company due to non-payment of debts by its customers. These debts are considered bad debts because they are unlikely to be recovered, and the company has already provided the goods or services to the customer. Types of business-related bad debts. There are several types of business-related bad debts that a company may incur. Some of the most common types include accounts receivable. This refers to the amount of money that a company is owed by its customers for goods or services provided. Inventory losses. This refers to the loss of inventory due to non-payment by customers. Rent and utility payments. This refers to the amount of money that a company owes to its suppliers or service providers for goods or services provided. Salaries and wages. This refers to the amount of money that a company owes to its employees for work performed. ### criteria for writing off business-related bad debts *** criteria for writing off business-related bad debts. A business can write off a bad debt if there is no reasonable expectation of recovery. This means that the company has already provided the goods or services to the customer, and there is no indication that the customer will be able to pay the debt. Examples of business-related bad debts: online advertising costs. if a company spends money on online advertising and the ads do not generate any sales, the cost of the ads can be considered a business-related bad debt. Tax deductions for small businesses. As a small business owner, navigating the complex world of taxes can be overwhelming. However, there are numerous tax deductions available to help reduce your tax liability and increase your bottom line. In this article, we'll explore the various tax deductions that small businesses can claim, including fees for licenses, regulatory permits, business-related publications, shipping costs, and even bank charges. Fees for licenses and regulatory permits. One of the most significant tax deductions for small businesses is the cost of licenses and regulatory permits. These fees can vary widely depending on the type of business, location, and industry. For example, a restaurant owner may need to pay a licensing fee to operate, while a retail store owner may need to pay a permit fee to display certain products. Some common licenses and permits that small businesses can deduct include plus business licenses, plus sales tax permits, plus employer identification numbers, EINs, plus zoning permits, plus health department permits. Business-related publications. Another tax deduction for small businesses is the cost of business-related publications. This can include things like business journals and magazines, industry reports and research studies, trade publications and newsletters, online courses and webinars. These publications can provide valuable insights and information to help small businesses stay competitive and informed about industry trends. Hashtag shipping costs. Shipping costs are another tax deduction that small businesses can claim. Final thoughts.